Everybody, DayTraderRockStar here with the high probability watch list for the week of October 25th. First of all, let me just say I'm glad to be back here. I've been under the weather, trying to figure out what was going on. Finally figured it out, and I thought it was some kind of misalignment, and I had a pinched nerve and stuff, which I did end up having. But I took a series of tests and stuff, and one of the tests came back and said I tested positive for Lyme disease, which is causing all the headaches and stuff. So I am on antibiotics. Had a real rough week, but I believe I'm all past the worst of it, and I'm slowly getting better. So in the office today, Paul's on the mic. I'm doing the research. Apologize for the last watch list never got out. I was really under the weather. I couldn't even move. So hopefully this will get us back on track, and we move forward from here. I've been watching the market today. I've been, still feeling a lot of stiffness in my my neck and stuff, so I haven't been really trading too much. I'm in front of the computer here, and watching the trades and stuff. And we just had a sell side divergence here, and the times I've been on the mic, or the times I've been on trying to recover and getting on here, we've been trying to call the market the way I like to do that, using some of our indicators. And each time we do see this setup, we see a perfect setup, and we see the market move in the direction of the indicator. So I am super excited to get back into trading short term, futures trading, bringing you some good long swing setups and everything. One of the main setups here is the stochastic divergence on the 1 minute time frame and on the 5 minute time frame. And as you can see, we just had one here. It's a combination of markets making a higher high, but at the same time making that higher high, the stochastics roll over underneath that 80 line. So we have that divergence. You have that move down, that red line here. I don't show the percentage K line. I show the percentage D line. And again, if you're unfamiliar with divergence trading or stochastics, I do a lot of there's a lot of information out there that I put out there, and educational videos and stuff that you can find on the site that explain it. And and I want to try to be a little bit more hands-on for the members out there. If they need help catch up on this type of trading, I'll try to walk you through it and kind of do a better job on doing that. It's very hard because we always have new people join the site, and it's hard to constantly go back and teach this. So I put out the videos. A lot of the videos are found on the dashboard. So if you have your dashboard, you go up at the top, you'll see the playbook trade. You also see the forum and stuff. So a lot of that education is in there. If you are a lifetime member, you have access to all the courses here at Day Trading Radio, and I advise you to take the divergence course. The divergence course it breaks it down in the best way possible. So let me just actually kind of guide you to that real fast. If I can do that. So if you go into Day Trading Radio, you log in as a member. Oh, actually, it's my login here. Oh, come on, Johnny. And then down on the bottom here, you'll see a lot of things you get as a lifetime member. You'll get the tradometer. You see the school of stock right down here on the right-hand side of the dashboard here. So if you click on the school of stock, it'll pop up. You don't have, if you're a lifetime member, you don't have to log in, even though there's a login button. Oh, what just happened? The market all right. I had a little meltdown on the computer there. Had to restart things. I want to try to pick up where I left off. There might be a little confusion in the video, but I was just about to sign in and show you where to find some of those videos to help you get on board with the divergences. So if you're up on the dashboard, if you just go up to your playbook area here, you should find a lot of that. But also down on the bottom, like I mentioned before, you have the school of stock, and you click on that. You don't have to sign in. There's a sign-in bot, a login button here. But if you if you're a lifetime member and you have access to all the courses, and I would definitely recommend the going through the divergence course. It has everything you need to know on there's all these lessons on this, confirming divergence trades, how to set up your charts for divergences, how to spot divergence on a 1-minute chart, 5-minute chart, 3-minute divergences. Lots of information there. I'm always adding to it. So again, check that out. And then today, being Friday, the market is closed now, and we're going to just go back. I'm actually going to show you the S&P. And what I always like to do is just kind of go through some of the opportunities that you had in the market here, along with bringing you some good setups on the stocks. But the real money is to be made each day. When you have these setups. Today, when I was doing this video, we actually had that divergence, and as you can see where the divergence lay down. And I always say the rule is on the divergence, put your stop and understand the overall trend. You can get divergences and see the market eventually move higher past that divergence. But after, depending on what time frame you're using, how the overall trend of the market is, and your underlying bigger time frames, you add all those in, and you really got a nice trade happening. Well, this was a nice, perfect textbook divergence as I was describing. As you can see, it pulled back enough. By the time you can recognize that divergence, you probably could have gotten, a good 5 points out of that. Now, how do you want to trade divergences is up to you. You could trade them using the futures, trading the S&P futures, the E-mini. You could trade the micros, which I like, the MES. You could trade SPY options. You could trade SPY, the SPY ETF. There's many different ways you can actually trade these moves. Each one will give you, a relative move, but I would definitely focus on some of the futures. You get the biggest bang for the buck on a short-term trade. So let's just go back here and let me bring this over so we get a good view here and pretend we're starting off on the morning. Now today, again, I was still a little under the weather. My neck kept on tightening up, and I was taking a lot of breaks and stuff. I didn't really trade too much. I have a feeling Monday I'll be almost really in good shape. So the market started off here. Again, futures are trading overnight. So you have those overnight futures and setups also. But when we talk about really getting some good liquidity in the market, you want to look at that 9:30 trade or actually, I would say from European Open, which is about 3 o'clock to 3:30. We usually see the big moves in the market. And you can see here 345 with a nice move up and then kind of move down. But we're going to just look at this, and I'm probably going to say we're only be taking 2 trades, just 2 trades. That really cuts out a lot of the chop in the market. We're looking for that divergence, long and short, and we're also looking at that 2020 bull and bear flag. There's also other trades that you can trade, but I consider those second-tier trades. Our first priority trades are those 2, and then we could drop down to like trading the VWAP and multiple indicators, where we have moving averages and VWAPs lining up, and trend lines and VWAPs, and trend lines and moving averages lining up too, and pattern recognition. I like to do that also. But the real deal is finding that good divergence. Now, and again, it's easy enough to look for it, easy enough to find it. So the market 7:30, the market opens up. We always say that the 9:30 open is a little volatile. Sometimes you get a drop and then a fast pop, or fast pop and a drop. It's very, very choppy, very, very choppy. So be careful on the opening first half an hour. We also have what's called the 950 reversal, which we tend to see if we start to hold certain levels. That 950 comes along and we tend to pop. And again, right here at 950, you can see that nice aggressive pop before flushing back down to the VWAP, which is an important indicator to have on your chart, and then to bounce back up. Now, there is other type of divergences. We got hidden divergences. We have double bottom divergences. We have closing price divergences, which I like to trade also, and relative divergences. Relative divergences, on my own terms that I place on this, is where you see the price come down. It's not a pure divergence where your price is making a lower low and the stochastic is going to make it a higher high. Like here you have a higher high on the stochastic, but you don't have that lower low. But we'd like to see how close that low comes down to the previous low and the closing price. And you'd like to see that angle compared to the angle of the divergence. Now, I probably wouldn't have taken this one, but you know, something similar. I'll show you when we do see it. I will point it out to you. The early trade here from 8:30 to 9:30, we started to establish a trend line. As you extend that out, you can actually see the market came down each time to that trend line. And again, another great trade is a trend line VWAP or trend line 200 period moving average, and those are very, very important. And that's a second tier trade, but it's still a very good trade. Anything off of that VWAP and trend line is very key. So you know, we could even add that in as a third possible trade if you do happen to see that happen. You have the VWAP and you have the trend line. So the trend line going up, and you're not going to, sometimes you're not going to see, but here's a good example. Here's an example we were just talking about. It's called a relative divergence. The price here comes almost exactly, sorry for the circle there, the price comes almost exactly down to the previous price level. Not 100%. Now I say we want to make that lower low and a higher low. But we don't make that higher low, but we're almost exactly there. It's relatively, we're pretty much right in line there. But you can see there's a big change in the stochastics. It doesn't come down like relatively right to, you know, if this came down to a low, you would expect the stochastics to come down, you know, right down close to a low and just kind of track that. But in this case, it was stochastics actually turned up. And from that point on, you know, that's where the trigger is. And it also is on a trend line. So that is a go-to trade. That is your business plan. That is where you have to step up in the market and take that trade. All right. So this is a good trade. This is an obvious entry zone, relative divergence right now. Just remember that term. So when you in the chat room and stuff, you can say, "Hey John, you see a relative divergence here?" All right. That's a relative divergence. It's not a perfect textbook divergence, mathematical divergence. We have a low and a lower low, but the price comes down just about equal with the price, but the stochastics are not equal. And we're seeing that divergence also on the we're seeing that on the 14.3, and that is a big part of that too. All right. Also see that the 60-minute, the 60 period, I should say, is slightly turning up, and that's your 5-minute time frame. So with that pushing up, you have all these things saying that your trend is higher. You have this, and that's really a good opportunity right there. Now these are scalping moves. I mean, you could hold on to these, you know, and place your stop here and see how far. And if you did, you know, you're probably going to get a lot bigger moves overall over the whole, you know, in the market. That's, you know, that's going to be really dependent on the current conditions in the market, the advanced decline line, you know, everything that you want to put into the big pot and see what comes out. You want to have a very bullish trend, and if you do that, then you're more likely to keep that trade on. If it's real choppy, then you want to take these little chops and get out of them. But yesterday we had a big pop in the market, and let's go back to the market right now for a second and show you something. We've talked about this about a month ago. Let me take a look at the SPX here. We had this nice downward trend, and we talked about these circles, and these circles represented these downward trends. And when the downward trends hit a big candle, we tended to have that follow through, big candle follow through. So we had a big candle yesterday, and that actually we had a big candle back here, and we got that gap up and then a little pullback. But this big candle was really key. And when you see a big candle with the stochastics turning up, you tend to have some follow through. So today was kind of a very bullish day. And as you heard from my last video I put out, I was more looking for upside based on the seasonality effect in the markets at this point, especially going into October, where we had the September swoon at the end of the September swoon comes in at the end of September and about the first week of October, and then the second week we tend to rally. So of course, textbook rally into the second week, and now, actually we have a weekend in front of us. Take it, no bad news comes out over the weekend. The market actually looks quite strong, and there's a good possibility we could actually start to move to new highs going into the Christmas season. The Christmas holidays session. That is another important time frame for the markets. So things are looking really healthy here. So we take that in consideration too. So get back on our trading thing. We had that nice divergence there, which if you did take that, you would have made a nice little pop in the markets. And then here he kind of chopped around. It's holding that trend line though. So we came down, held that trend line again. There is a divergence here. It's a slight divergence. It's very hard to read. All right, not a big angle there. I always say the divergence should be above 10% angle. A 10%, 10 degree angle, I should say. Percent, but degrees, where you have this, the steepness of this line really helps you. So you put the low in there, and then you have the higher low. And you want to have that divergence, I'd say 10% or higher. The higher that steepness of that divergence, the better the divergence. You have a slight one there. Again, plus with the trend line and the moving average, it probably is worth a shot on this, So, not to say that I would have taken that. I don't know. I would have to see how I felt at the time, But it did look like a good, and again, it is a divergence. It has all the characteristics. It had everything supporting it too. So it's really a multiple indicator setup, and you should take that. You honestly should take that. You should step into that trade with a stop underneath that low, or just that trend line, and then you got a nice run up here. And this is beautiful. You ran up, and look at this nice little pop. And as you're popping, guess what's failing? The stochastics roll over. They roll over. Right here, it doesn't even make it above 80, that 80 line, which is really key for me. And from that point on, that was your short. Now, going into the last hour of the trade, a little bit more choppy. And again, this is a scalping game, and this is on the 1 minute time frame. Let's talk about the tools you have to identify. And we have a Rockbot, which identifies the divergences on the 5 minute time frame. Now with the 1 minute time frame, you got a 1 minute trade. You got rotations that happen fast, goes from 20 to 80, probably 5 to 7 candles. And then if you're talking about a 1 minute chart, you're talking about 5 to 7 minutes in a trade. When you talk about a divergence on the 5 minute chart, that is even better. So let me see if I could drag this over here for us and show you the Rockbot. Now I had the Rockbot running today till the computer crashed, and I had to restart it at the end of the day. Let's see here, let me clean this up a little. I'm just going to give us more room by taking that down. Alright, so let's just go out here, and we can see this runs overnight. So, lots of times you'll see that divergence set up and a nice move. Now, 5 minute divergence, 5 minute candles. So, and you talk about average time for rotation. In my studies and my research, is 5 to 7 candles per rotation per time frame. So, a 5 minute candle would take 5 minute candles would be 25 minutes to 35. So you're talking about a good half-hour trade that you could be in a trade like this, which gives you a lot more opportunity, a lot more possibilities of a gain. So 42 to, actually this one, 42, 46, 4 or 5 points. The same thing down here. Now this sometimes you might not see the divergence. And again, this is a formula that I wrote that measures out divergences by the criteria, having that lower low and the higher low. And it has a confirmation candle, and then it has a trigger. So it usually is, I could time this a little bit better. I try to cut out a candle to get an earlier entry. But either way, it does show you great divergences. And from that point on, if you happen to see yourself, recognize a nice divergence, and the Rockbot confirms a right divergence, a good divergence. Then you're all good. 5-minute divergence, and it pushes and it automatically takes targets. Now I have this defaulted to take fast profits and have a very tight trailing stop, just because I wanted to identify divergences, and that's it. I wanted to identify divergences, and then the rules of the trade and how you're trading and how we're analyzing the market really depends on where we're going to put our trailing stops, where we're going to put our first profits and second profits. And it's always important to have a good strategy of having multiple contracts on, so you could capture the bigger move. Lock in profits on your first profit, move, break even, stop up. You're trading with free money, and then you could follow it up with a trailing stop. So these all worked out good. So you could overlay this, even though this is before the market opened, but we did right here before the market opened, but we did have a divergence, and lots of times we do. At that was a short, actually. There was a short divergence here too, and that was long short. And then at the end of the day, there was actually a divergence right at the end of the day from these candles, and then closes out at the end of the day. So just remember, you have that always working for you. All right. And again, if you have the lifetime membership, which we appreciate, it helps the site. You get that code, and it works on the Ninja Trader right now. I'm working, and we'll be working on getting that, working on some other platforms, TradeStation, etc. So what do we have now? So the day goes on. You can see the little chop here back and forth. Nothing really showing up as divergences or anything, and the day ends on a good note. So that is our money making machine. While we're looking and trading individual stocks, you could easily be looking for these divergences, or I'll be pointing them out. So I think it's a good tool to have in your toolbox. Being able to trade the futures, or trading these signals on any way you want. Options on the SPY, or options on any underlying vehicle that represents your divergence, whatever you're looking at the divergence. It could be on the NASDAQ, it could be on the Dow, it could be on the Russell, it could be on an individual stock. It doesn't matter. The math is there, the science is there. All right. So let's move on to some stocks now, because this was just a good day for that.